People talk a lot about trading fees and about the actual, those base costs of execution, but there's a lot more at play.
So what changes do you see coming as other asset classes come under the new obligations of MiFID II?
I think looking at it, there's a number of obligations that are coming onto these other asset classes, especially around best execution. And one of the biggest challenges, and we've seen it in equities, having been in equities for a number of years and been through MiFID I, one of the biggest things is that I don't think that there's a underlying issue where firms in other asset classes have not been trying to get best results for their clients. The biggest mentality shift and the biggest change is around process and documentation and proof. And that's the biggest challenge, I think, is there's a lot of asset classes and a lot of other areas where the information and what's happening in the equity markets, it's not as transparent and there's not as much information available. And people have to get their head around the fact that they have to keep a lot more documentation. A lot of it's process, and I think that's a mentality shift. These guys already know their business. They know what they're doing. They know how to get best results for their clients. Otherwise, their clients would have walked away years ago. What they need to do now is they need to be able to prove that to the regulators, and they need to provide more documentation. Even on the equity side, where the change is quite a small wording change in the regulation, but what it means is that you have to have more process of review, you have to keep better track of what you're doing and show not just that you've put a policy in place for best execution, but that you're reviewing it on a regular basis, and if there's any deficiencies in that, you've got process in place to deal with those deficiencies and address the challenges. So it's really more about process and keeping track of what's going on. So I think other asset classes are going to have to do some work just to keep up, to move up to that level, and to basically be able to provide proof to clients and to regulators to say we are actually doing what we've been doing for these years. It's just putting a bit more process around it. That's a large part of it.
So how is SIX Swiss Exchange helping the market execute these obligations?
So if you look at best execution as a wider picture and getting best possible result for clients in the broad sense, there's a number of factors that come into play. People talk a lot about trading fees and about the actual, those base costs of execution, but there's a lot more at play. What we're doing at the Swiss Exchange is we're focusing on a couple of key areas. One, being the infrastructure provider to the Swiss market, we really focus on how we can provide new services and make members' business more efficient so that they can basically deliver better services to their members for a better cost. If we bring their bottom line down, then they can actually reduce that for their clients as well. And we're doing that through a number of initiatives. We've got a key one going on right now around OTC derivatives and creating a trade repository for that I think is really going to help members to satisfy the new regulatory obligations for a reasonable cost. And that helps them to deliver better services to their clients. The other side of it is looking at the actual cost of execution. Trading costs themselves are a small part of the execution puzzle when you look at the overall, what the end result to a client is. We focus a lot on book quality in terms of how much liquidity is available to clients, the size of the spread when you're actually having to cross the spread to acquire a stock or to sell an instrument, and as well, what kind of mix of flow is in that book to make sure that when you're trading, you're actually going against people that are trading for the best intentions of the market. And we monitor that very carefully. The latest stats we've seen have shown that we're doing a very good job of that. We've got a high presence at the best bid and offer within Europe. We're competing very well. The other factor is new services. We've recently introduced a non-display booked Swiss at mid, which allows people to match the midpoint of the bid and offer. The uptake for that has been phenomenal. The Swiss market in particular has been really, really strongly supportive of the initiative. They see it as a huge value add, and we're getting very positive feedback from the market, which has been good. I think that's really helping members to achieve price improvement for their order flow, where in the past that may not have been as easy to do or wasn't as available to them. We've made it very simple for people to get price improvement on the exchange, which does help when you're trying to differentiate and trying to show people that you are getting good quality execution for their for their clients. So,
well, thank you, Robert Cranston, for joining us today. It's been a pleasure.
No problem. Thank you.
And thank you for watching. Don't forget you can get more programs on Bergenstock by clicking back on our channel. Goodbye for now.